Welcome, accounting boffins out there. You are Ashraf Patel and the crew, and today's destination is the creditors' reconciliation. Right. Now, before we even set foot or embark on this destination, this particular creditors' recon is what we call the internal creditors' reconciliation. Remember, with creditors' reconciliation, there are two different journeys to undertake. We are taking today's journey on the internal creditors' recon, right? So keep that in mind, keep that as your focus so you know what's our destination. Right, let's move on. What is the relationship between a business and their creditors? Okay? In other words, firstly, what do we mean by a creditor? It is important, it may sound basic. A creditor is somebody that we owe money to. When I say we are the business. Remember, we are the business and we owe money to our creditors. Right. Okay. Now, think about this here. You are buying goods on credit from your suppliers, namely your creditors, right? Look at the process. You're going to enter this information into your creditors' journal. From your creditors' journal, you're going to post to your general ledger, right? So obviously, there's a posting to my general ledger, your double entry, where you're going to debit, for example, let's take an example, so it becomes easier to understand. Bought trading stock on credit from a supplier. Identify your two accounts involved. Your two accounts involved are trading stock, asset account, increasing in value, therefore debited. And you're going to credit your creditors control account. This is, remember guys, in the general ledger. You're going to credit your creditors control. Why? Because you now have a liability. You're owing money to your creditors. Got that? Brilliant. Now, you also have to make an entry in your creditors ledger. Now, obviously, there's a distinction here. You've got your general ledger subjected to the double entry, but you also make a single entry in the respective subsidiary ledger. In this case here, the subsidiary ledger we are dealing with is your creditors ledger. Obviously, we're dealing with creditors control. Therefore, the question arises, why do the accountants adopt the triple entry principle? Okay? Why the triple entry principle? So, if I look at my creditors control account, okay, and let's do that. There's my creditors control account. It has a balance of 1,200,000. Okay? What does that figure indicate? That figure indicates to you that the total amount of monies that you are owing to your creditors is 1,200,000. But if I ask you a specific question and I say, how much do we owe Tiboho? What are you going to say? Do you get the information from your creditors control account? Certainly not, because that's the summary of my creditors, and therefore it becomes necessary for us to also draw up the creditors ledger, wherein we will find specific accounts of creditors, people that we are owing money to. And one of them obviously would be Tiboho, and we will go in there and say, okay, we're owing him an amount of 200,000 Rand. So, if I have to summarize just this point here, your creditors control account is a summary of your creditors ledger, right? And therefore, you will notice that because you are dealing with two different ledgers, you're dealing with the general ledger on the one hand and the creditors ledger on the other hand, these two have to be the same. That means the total in your creditors control account, the example that we used here was 1,200,000. In other words, if I take my creditors ledger and I extract the final balances of every creditor, I should get a total of 1,200,000. If not, if that does not happen, it means that we have to reconcile what? The creditors control account with the creditors ledger. Okay. So, we've spoken about some words here. Let's go into an explanation so that you have a clear picture in your mind what we're talking about. What is your creditors control? Remember, it's one account that's kept in your general ledger and it reflects the total amount owed to all the individual creditors, right? Like I said earlier on, the creditors control account will show you one balance, the total amount that you are owing to your creditors, one amount. So therefore, if you look at your creditors list, what is the creditors list? Your creditors list are the individual creditors that you owe money to. So, if you want to know how much you are owing to John, you will go to your creditors ledger, look for the account of John, and say, right, this is the amount that's due to John, right? However, keep this in mind, that if you take your individual creditors one by one and you extract what we call a creditors list. Now remember, this creditors list is an extract of your creditors ledger. That's very, very important, right? The fact that your creditors list, now understand this, in your creditors ledger, which is your subsidiary ledger, right? You have individual accounts of creditor. Like we said, each creditor has his or her own account. If you take the final balances of each creditor's account, you extract what we call a creditors list. Now, this list is a list of people that we owe money to or the business owes money to, right? Okay, so now you have seen that you have your creditors control account, which is a summary of all your, it's a cumulative summary of all your creditors, and your creditors list, which is an extract of your creditors ledger, has the individual creditors in them. And once again, the example of the triple entry principle. Let's just go back and explain that one so you can see what I'm saying. If we bought goods on credit to the value of 200,000 Rand, right, from multiple creditors, your creditors control account is going to show you a credit of 200,000 Rand. Agreed? So here we go. Here's my creditors control account, and you've got the amount of 200,000 Rand on the credit side, indicating that that's the value of goods that we purchased on credit. If you want to know who did you buy from, the individual persons, So your contra account in your general ledger is a debit to trading stock, a credit to creditors control, 200,000 Rand, right? But the individual entry, the single entry, will be made in your subsidiary ledger, namely your creditors ledger. Okay. So, what does a creditors account tell you? It gives you an indication of the purchases policy that we are using, right? In other words, it gives the monetary value of merchandise and other items that were purchased on credit. So clearly you can see not only is the accounting aspect in terms of the double entry important, but also gives you information regarding the purchases policy of the business. How and from whom are we buying on credit? It also tells you the credit policy. In other words, the account indicates the amounts owing to creditors, right? By the same token, like we need to control people that are buying from us on credit. Those are our debtors. But when we buying on credit, we want to know how much are we owing our creditors. Why is that important? Because it gives us an indication of whether we will be able to meet our obligations. Will we settle our creditors' accounts on time? Let's not have a situation where we don't settle the account of a creditor, and as a result we are penalized and we have to pay interest on that account. Obviously we don't want that situation. Also, what incentives are being offered by our creditors? If we settle our accounts timeously, are we entitled to a discount? So all of this is very, very important when we are analyzing the credit policy, okay? Then the financing policy, which I've alluded to already, but watch here. A creditor's account also indicates how regularly payments are made to them. Very important. Are we meeting our obligations? Are we paying our creditors on time? So that we don't have to pay the interest, like I alluded to, and we then also benefit from the incentives by settling the accounts timeously. Okay, so this here, people, if we summarize the first segment of our lesson, we can clearly see that we have a creditors control account in our general ledger, which is a summary of all my credit transactions entered into with my creditors. At the same time, I have a subsidiary ledger where the individual creditors' accounts are recorded, and therefore we have the triple entry principle, the double entry in my general ledger and a single entry in my subsidiary ledger. And clearly you can now see the need to ensure that my creditors control account must agree with my creditors list. And once again, what is the creditors list? The creditors list are the final balances of each creditor as it appears in my creditors ledger. Okay guys, we've touched, we're in flight. Our destination is the creditors recon. We've discussed important concepts, but I'm sure you want to know more. And in order to do that, you need to stay with us. We'll see you just now. Welcome back, accounting boffins. Remember, our destination is the creditors reconciliation. And yes, which one? The internal one, where we are reconciling our creditors control account with our creditors list. Internal, only what's happening in our business, right? Okay, now, if you look at your creditors control account, right, the question says, what information can we extract by examining this account? In other words, you are given an account, and you are asked to examine the account and answer relative questions. Let's go right into it. So clearly, let's look at the account first. Remember, it appears in your general ledger, right? General ledger, we said, you'll have one account, namely the creditors control account. It's in your balance sheet section, indicating to you that it's a liability, and obviously the name of the account is your creditors control account. Okay, so this is your creditors control account that's given to you. So in this particular example, you are given a creditors control account, and yes, you may think, why are we doing this? It's important to understand the basis and the operations of a creditors control account before you even try to reconcile it with your list. Once you understand this, then obviously when we go on to doing actual differences, you'll see why this is important. Right, the question first says here, cash discount amounting to 480 Rand was received from the creditors during October 2019. How much was paid to them? Okay, so obviously you have to analyze the account by looking at the account. Firstly, identify the payment. You've made a payment to your creditors. Obviously, the creditors being a liability account, it's decreasing in value. So step number one, the focus is my debit side. Clear? Now identify. Here we go. There's an entry here that says bank and discount received. So the total amount of the transaction was 24,950. Clear? So that entailed two components. Remember, bank and discount received. At this point here, let me just give you a quick explanation of the two separate accounts involved when there's a discount involved. Step number one, when you pay your creditors, right? Two accounts involved. Let's assume there's no discount. You just settle the amount of a creditor. You credit your bank. Why? Asset account decreasing in value, or liability account increasing in value. Remember, when it comes to bank, know the status. Yes, the status of the bank account. So we're assuming it's an asset. It has a debit balance, so you're going to credit it because it's an asset reducing in value. And you're going to debit your creditors control. Here we go. There's the debit entry from the payment that we had made. Now you come to the discount. The discount, people, has absolutely nothing to do with bank. When you're receiving a discount from your creditor, your two accounts are creditors control and discount received. It's a debit to creditors control to reduce it. You owe them less. You are receiving a discount. And you're crediting discount received because it's an income account and it's going to increase the owner's equity. Therefore, it is credited. Clear? So therefore now, if you look at this here, the total amount of the bank and the discount was 24,950. And my question was, how much was actually paid to them? Right? And here we go. Watch. 24,950 minus the 480 was your 24,470. Okay, so there was two transactions involved, but the amount that was actually paid to my creditors was 24,470. Okay, now the next question that we have to answer is, again, here's your ledger account with all the given information, and your question is, name two accounts that could possibly be credited as a result of the entry of 2,310. Let's find the 2,310 firstly. Here we go. 2,310, the entry is on the debit side of my creditors allowances journal, coming the source of the entry, right? The folio reference as you can see here, is creditors allowances journal. Right. So obviously, what's happening to the creditors control account? The creditors control account, being a liability, is being decreased as a result of a transaction that's coming from your creditors allowances journal. Right? Now, what is it that you enter into your creditors allowances journal? It could be the return of merchandise, the return of something that was bought on credit, or an allowance that was granted by a creditor for incorrect goods supplied. So therefore, clearly you can see it could be the return of goods or an overcharge, or we may be returning trading stock or stationery or equipment or whatever else. So this tells you that the creditors allowances journal is used to record all transactions where we are returning goods to our creditors, either wrong goods supplied, damaged goods supplied, overcharge, etc., etc., etc. Right? So clearly understand that from your creditors allowances journal, what's your contra entry? You debiting your creditors control and you crediting the respective account. For example, if we had returned trading stock, right, then clearly you can see here. I want to isolate this entry for you. You debiting your creditors control with 2,310 and you crediting, let's say we return trading stock, so there's my trading stock account, 2,310. Here's my double entry, right? So clearly you can see that this entry involves the creditors control account where it is being decreased, right? The account again, and now we ask, the question is, we've done this one here. The question says here, give one possible reason for, let's see this one here, give one possible reason for the entry of 300 Rand. Okay, let's identify the 300 Rand first. So step number one, identify the 300 Rand. What are we looking at? Here we go. There's the 300, right? Interesting one. So keep your wits about you. We're going to go into an explanation on this one here. Firstly, it's an entry on the credit side of your creditors control account. Okay? In other words, your creditors control account is being credited. Okay? So it means it's been increased. Right? But the source of the entry, the folio reference is cash receipts journal. Right? Okay? Sounds a bit of a challenge here, but don't fear when Ashraf is near. Let's look at it. Simple. What does it involve? It involves a refund from a creditor. Now, once again, I'm going to isolate this transaction for you. And I'm going to take you into an explanation, and I'm going to show you what's here. Here's my creditors control. I'm owing my creditor an amount of 1,300, right? Subsequently, this amount was paid. So I paid my creditor, there's my bank account. I paid my creditor 1,300. Clear? When I paid the creditor 1,300, my contra is a credit to bank and a debit to creditors control. Let me do this here. Right? And if I do that, I can now clearly see that I'm not owing my creditor any money. Okay? If I now return goods to my creditor, right? Credit trading stock, debit creditors control. So watch. Here's the return of goods. Clearly you can see now your creditors control has a debit entry where the creditor in fact owes you money. And as a result of that, they are refunding the amount to us, and therefore the answer is a refund from a creditor. Clear? Hope you understand that. Okay, still busy with the account. We've done that one there. And we now come to here where it says, a creditor with a credit balance is transferred to the debtor's ledger, in which amount quoted above is the transfer of this balance included. So you are transferring a creditor with a credit balance. Obviously, guys, this would mean that you're looking for an entry which was done in your general journal, right? Remember, all these transfers of debtors and creditors are processed via the general journal. In other words, know what each journal is being utilized for. Because once you know that, you'll know that if it doesn't fit into any of those journals, then obviously it has to be processed via the general journal. Okay? Briefly explain the most effective way of checking the balance of 32,120. So here we go. There's a credit balance of 32,120. In other words, my control account tells me that my creditors are owed an amount of 32,120. The question said, briefly explain the most effective way of checking that balance. And the answer is, watch, check against the creditors list. Why? Remember what we said earlier on. The creditors control is a summary of all my creditors. So if I want to check the accuracy, I would take the 32,000, what is the amount? 32,120, and yes, I would draw up a list of my creditors from where? From my creditors ledger, right? Indicating each individual creditor, and yes, I must add it up, and if I get a figure of 32,120, then voila, I know that the accuracy is there of my creditors control account as opposed to my creditors list. Right? We now have a question here. It says here, the auditors have discovered that an employee, Mr. Goodness, had defrauded Star Traders by ordering personal goods for himself from the creditors. Star Traders had then paid for these goods here. Briefly explain how you could improve the internal control in this area. Simple. Make sure of one, all payments are made against source documents. It means you only pay against a source document. Remember, the basis of every transaction is the source document. Right? Unlike you in school, you may be working from LTSM that says they give you the transactions, but in reality, that transaction originated from a source document. So check the source document, make sure there's an internal audit. Very important. Internal control, internal audits are important to make sure that we do not have a situation where we can be defrauded. Stock taking on a regular basis. All of this falls within the ambit of internal control. And yes, what do we know? The purpose of internal control is to safeguard the assets of our business. Okay, guys, that's the end of the second segment. We've touched on the creditors control account. Now you have to have a proper understanding of this control account. We're moving on to the actual reconciliation of what? The control account with the creditors list. So if you want to know more on that one, stay on our journey. See you in a jiffy. Welcome back, accounting boffins. Remember, we're on the journey of the creditors reconciliation. Which one? The internal creditors recon, where we are reconciling our creditors control account with our creditors list. Right. We have a situation here where we are told that the creditors control account in the general ledger of Tom's Stores showed a credit balance of 14,454. So that's the credit balance in the creditors control account. Okay, moving further, while the creditors list in the subsidiary ledger showed a total of 6,876. Challenge? Yes. Why? Because ideally, we know that the creditors control account has to be the same as the creditors list. Now, obviously they're not the same, so we're going to reconcile. What are we reconciling? Let's understand that. We're reconciling the creditors control account, here we go, with the creditors list. Right. And the following errors and omissions were found in the books of Tom's Stores on the 30th of June 2020. Right, so we are given the errors and omissions, we now must correct it. Okay, let's take the first one. So here this is what we have. You have the creditors control account, right? Remember that's in your general ledger, and you have your creditors list from your creditors ledger. So this is the heading of the question, and this is what this is the table that you are going to use in order to solve the challenges that we have. What's the first one? A casting error in the creditors list resulted in the total being undercast by 1,200. Whenever you are doing this type of reconciliation, you need to ask yourself the question. Yes, in accounting, we allow you to be mad. Talk to yourself. Sometimes you need good advice, so you get it from yourself, right? What does it say here? 1. Where is the error? Step number 1, ask yourself, where is the error? A casting error in the creditors list. Here we go. In the creditors list. Here. That's where the error is. Obviously, it means when we are fixing, where are we going to fix? We're going to fix in the creditors list because that's where the error was. What was the error? We are told it resulted in the total being undercast by 1,200, meaning it had 1,200 too little. Therefore, focus into my creditors list. Here we go. There's my creditors list. Debit, credit. What do I want to do to my creditors list? It was undercast. It had 1,200 too little. Immediately, what am I going to do? I'm going to go to my creditors list. On the credit side, I'm going to add the 1,200. Obviously, it was undercast, meaning it was added incorrectly. So what do? Correct it. Put in the amount in my creditors list in the credit column, right? Sometimes you are not given debit and credit in your answer book. You're just given debtors control. I repeat, you are just given creditors control and you are given creditors list. In that case, you must know whether you are adding or you subtracting. But in this particular example, you are given debit, credit, so you know you want to increase your list. Therefore, you credit it with the 1,200. Done and dusted. Problem resolved, challenge solved, move on to the next one. The balance of a creditor's account was omitted from the creditors list. How much? 366. So immediately I tell myself, right, first question, remember I said talk to yourself, where's the error? Is the error in my control account or is the error in my list? The balance of a creditor's account was omitted from the list, immediately telling me that's my focus area. Where? My creditors list. What do I have to do? The creditors amount was omitted. Omitted means left out. So what do? Bring it in. It's a creditor, so add to my credits. There's my 366. Notice I'm adding it to my list to increase the list because the error, the omission was on the list. I fix it up in the list. You see that? So, you're learning a very important principle here. Wherever the error is, that's where it must be corrected. Okay, next one. The total of the discount received column in the cash payments journal was incorrect and posted to the creditors control account as 390 instead of 490. Right, okay? Once again, look at the error. Where are we posting from? Cash payments journal, right? And it was a total that was posted as 390 instead of 490. First question that you ask yourself, where is the error? The error is in my control account. The total of the discount received column in the cash payments journal was incorrectly and posted to the creditors control. So there you can see the control account was incorrect. Right. What was it? What was the difference? It was posted as 390 instead of 490. Clearly you can see there's 100 Rand different. What happens to that amount? It must go into my creditors control account on the credit side, 100 Rand. Right? Clearly it was posted as 390 instead of the 490. Okay, this means therefore that you are now correcting your control account. Okay? Next one. A debit note for 179 was recorded correctly in the creditors allowances journal but posted to the account of AC Naidu stores as a credit entry. Right. Interesting one. There was a debit note from whom was recorded correctly. The journal is correct. If your journal is correct, that means you don't touch the control at all. Where do you go and work? In the individual account, which is in my creditors list. Clear? So if that amount is in my creditors list, what's important for you to note is that it was an allowance, right? That means you had received an allowance from your creditor, okay? And it was posted as a credit entry. In other words, what have you done? Look at your original error. The original error is you increased the amount owed to the creditor, whereas in fact it was a return, there was an allowance. Now watch this here. If you only put in the 179, I'm going to do that, you're basically going to just cancel out the 179 if you only enter 179 on the debit side. This is an explanation, guys, so watch. These entries that I'm putting in are merely explanations to you. The correct entry is, in order to fix it up, you have to double it on the correct side. So, initial entry was 179 on the credit side. If you only put 179 on the debit side, can you see you're merely cancelling out your original mistake and you're not showing the actual return of the goods. So if it goes to the incorrect side, in order to fix it, we have to double it on the correct side. There's the double of 358 on the debit side to indicate the return or the allowance that was given to us by the creditor. Okay, next one. An EFT payment, right, of 420 to A Apple, a creditor, was posted to the account of H Apple. Okay, first question. Would this transaction result in any difference between the control and the list? And the answer is an emphatic no. Why? Yes, a payment was made, but it went to the wrong account. Instead of A Apple, it was posted to the account of H Apple. So clearly you can see here, in your creditors list, one account must increase while the other must decrease. You may think it has a zero effect, but not true. Yes, it's showing as a 420 debit and credit, which is correct. But remember, one account you need to add the 420, and the other account you need to subtract the 420. Because remember, you paid A apple, right? So your books are supposed to go, the payment is supposed to be reflected in the account of A apple, but you post it to the account of H apple. So between the apples there's a problem, right? What's the problem? One account will have an amount too much of 420 Rand, and the other account will not show the necessary transaction. Therefore, you have to make an entry in both the accounts of your creditors. One will increase and the other will decrease. Okay. Next one. An invoice of 678 has not been recorded in the creditor's journal. My first question to you is, the transaction was left out completely. It means not recorded at all. Now the question arises, will my control account agree with my list if a transaction is left out in totality? And once again, the answer is yes. Your control account will agree with your list. That's assuming all other entries are correct. What had happened here? The invoice was left out in totality, meaning it was not recorded at all. What are we going to do? We're now going to record it, right? We're now going to record it. And how do we do that? How do we fix it up? Watch. It's an invoice, so obviously my creditors control account will increase. I will put it on the credit side of my control account, and at the same time, it will also go to my creditors list on the credit side. Why? The transaction was left out completely. Clear, guys? So, remember this for the future, that if a transaction is left out in totality, because you could get this as a question in the exams, an invoice of 678 has not been recorded in the creditor's journal, would there be a difference between your control account and your list? And like I said, the answer is they would agree. Why? It was left out in both places. Therefore, we will now correct it in both places, in your creditor's control as well as your creditor's list. An invoice of 358 has been recorded in the creditor's journal but was posted to the creditor's account as 583. Once again, first question that you ask yourself is what? Where has the error been made? So, it was an invoice, correct, of 358, recorded correctly in the creditor's journal, so immediately you tick off. Creditor's control is correct, needs no change. Where was the error? The error was made in the creditor's account. That means in my list, there was an error. What did I do? It was an amount of 358, was recorded as 583. Clearly you can see there was an amount of 225 too much. Okay? There was an amount of 225 too much. You overstated the amount in the personal account of the creditor. This has now to be corrected. What do? We make an entry with the 225 on the debit side, right? Why? Because initially, and I'm going to show you this here, watch here, the 583 was entered there, right? And clearly you can see it's different to the 358 in my control account. Now you can see with the 583 on the credit side and you debit it with 225, the net effect will be a credit of 358, which is then the correct amount. So what are we doing here? What are we doing so far? We are reconciling the creditor's control account with my creditor's list. Remember, it's the internal creditors recon. Yes, you also get an external creditors recon, But we'll get to that destination some other time. Okay, now what do we have to do? Remember, you must always have division of duties. What do we mean by division of duties? By division of duties, we mean that you cannot have the same person checking on stock that needs to be ordered, ordering the stock, receiving the stock, and putting the stock into the showroom or into the warehouse. Because obviously, that is asking for trouble. That could lead to a possible fraud or theft, because one person cannot be doing all those duties. Therefore, you have division of duties. One person checking, one person in charge of procurement, the other person receiving, and the supervisor acknowledging and entering into stock. So in that way, you also have division of duties. Very, very important aspect of internal control. Number two, we don't have it here, but you could also have rotation of duties. Why is that? So that when a person doesn't get too comfortable in the same position, in that way, you can see that if you rotate the duties, in that way also, you would then have better internal control. Remember, we're dealing with creditors. These are the people that we are procuring our goods or whatever we need on credit. So we need to ensure that everything is hunky-dory. Proper authorizing. That means if you have your division of duties in place and you have somebody from the senior management finally authorizing the order of the goods, very, very important. In this way, you know that the goods that are needed are ordered, and also it's what the business requires to sell. So therefore, the authorization is critical. Proper documentation. Yes, with every transaction, there has to be documentation. And the documentation would form part of my internal audit. If I walk in and I'm doing an audit and I want to know who ordered these goods here to the value of 3 million rand. Was it ordered from a buddy? Was it ordered because somebody got a kickback? There may be various reasons. So therefore, if you follow the proper procedures, then definitely you're safeguarding the interest of the business. And like we've said over and over and over again, internal control is to safeguard the assets of a business. Then you have checking who's involved with the purchases. Is your returns policy in place, right? Discounts. Are we ensuring that we're settling our accounts on time to get the necessary discounts? And yes, are we settling our accounts on time so that we don't have to pay any interest on our overdue accounts? Remember, we're dealing with creditors, and we want to have a reputation, because we as a business, our reputation is important, because we want to ensure that we do not fall into a situation where we are overdue with our payments, and as a result, you also get a bad credit rating. That's very, very important. Okay? Separation of your duties with regards to the purchasing of goods. Right? I alluded to this just now. Who's responsible? Have somebody responsible for purchasing the goods. Have somebody responsible for the receiving of goods. And who is responsible for making payments? Well, accounting guys, it's time for our flight to land. It's time to disembark. From Ashraf Patel and the crew, we hope you enjoyed this flight with us. We hope you understand why we do an internal reconciliation between the creditors control account and the creditors list. Until the next flight, be good. Bye-bye.